So hello everybody, Rob Yastrzemski with RJ Homes and eXp Realty here. I'm joined, thank you very much for joining Andre Houle with the Dominion Lending Centers. And today I'm excited to just have a quick chat with you about all the upcoming changes. It's, we're only a week away from Christmas here this year in 2024. So excited about that, but really wanted to take a look at the year that has been and what the new changes. There's lots of new changes coming up, so I'd love to hear from you, Andre. So without further ado, right off the top, what are we looking forward to for mortgage changes in the upcoming year, or what has just recently happened here?
Yeah, no, thanks, Rob. Thanks for the introduction there. Yeah, no, there's lots been going on. Just here on a lot of changes here came to effect on Monday here, December 16th. Two main ones right off the bat would be the insured purchases that we can go up to 1.5 million now, where before we were only allowed to go to $1 million. That hasn't actually changed since 2012. So 14 years that we've been at $1 million, and they've increased it with cost of living. Edmonton's probably not seeing a ton in that $1 million range, versus of course Toronto and Vancouver is where that was really brought in for. But we still have the rules of the first 5% down on the first 500,000 and then 10% on the remainder. So it's just that they've increased where they'll actually insure a mortgage now up to 1.5 million. So that's a good thing. But the best thing I think that came out on Monday was the increase to the 30-year amortization. So we were
just want to clarify. Sorry, I don't mean to interrupt, but I just want to clarify. The 5% down is up to 500,000. Then 10% for the remainder, but it used to be that the remainder only went up to $1 million. And then after the $1 million, you have to come up with how much?
With 20% down.
Okay, that's what I wanted to make sure that we captured here. And now that has moved where you put down 5% on the first 100,000, first 500,000, and then 10% for anything above 500,000 up to 1.5 million.
1.5 million, right.
And then you still need 20% for anything over and above 1.5.
Over and above 1.5, correct.
Gotcha. Okay, now, you mentioned 30-year amortization. What's that all about?
So that's exciting. On any first-time home buyer can do 5%, can do a 30-year amortization. Resale, new homes, doesn't matter. As a first-time home buyer, you can do anything. Okay, you can get the 30-year. There's a slight increase to the CMHC insurance or general Sagen insurance. The old 25-year rate is at 4% fee. The 30-year amortization is at 4.2. So it's not a huge jump to get the extra 5 years. Okay, it's a one-time fee that they add into the mortgage, so it's nothing to do with the interest rate. Interest rate's still the best on either whether you take a 25-year or 30-year. Interest rate's the same. Okay.
Oh, good point.
Yeah, the nice part of that is the payment can be lowered if it's a 30-year amortization. So one that can either help the pocketbook if you're buying the same value of a home, but the other side of it is it might get you into a property that you weren't able to get into prior to that, because we can go a little bit higher in what you qualify for. Okay, so that's the benefit of the 30-year. Now, on a new home, any new home, you can do 30 years. So if you're an existing home buyer, you've already bought a house already, and you buy a brand new home, then you can still do a 30-year amortization. But you can't buy an existing home at 30 years if you've owned a home in the last 4 years.
Okay, so you have to be a first-time home buyer or a home buyer that has not owned a home or has not purchased a home in the last 5 years.
Has not owned a home in the last 5 years.
Okay, right. So that's good to clarify that. So basically the definition of first-time home buyer is you have not owned a home in the last 5 years. You could have owned a home 7 years ago and then you've been renting ever since, or been overseas or something, and you come back, you're a new first-time home buyer again.
There's a couple of nuances where they might allow it if you've been separated, things like that in the last 5 years, where you're getting out of a matrimonial issue. They'll still allow the 5% down on that type of stuff. So I'm
Good to
assuming
know.
they're going to do the same on the 30-year amortization. They're not going to hinder you because of that breakdown of a relationship, right?
Right. You know what? That's exciting. That's exciting for our buyers. I know working in this market, it has been pretty difficult for some buyers to accept the fact that they're no longer able to qualify for as much as they would have a couple of years ago when the interest rates on the mortgages were lower. So now more, not only are, and we're going to cover this in a little bit, but not only are the interest rates starting to come down for a mortgage or mortgages, but we're also getting to extend the length of those mortgage terms. So win-win. Now maybe those buyers that were disappointed about not being able to find or be able to qualify for those homes that they thought they'd like to buy are now going to get that option again.
Right. Well, that's the goal, right? And especially those guys that have been on this fence for a little bit, that the home prices haven't seemed to really drop. I mean, you're more of the expert on that than I am. But by waiting,
prices have gone up.
Well, exactly.
In Alberta, anyways. I know it's different across Canada, but in Alberta, prices have definitely been going up steadily last couple of years.
Right. So that's the hard part, is when, if you were on that fence a year ago and now the 30 years has come out, hopefully we can get you more than what we could have back then, but you're also buying more. So,
right.
Sometimes I don't recommend sitting on the fence too long. If that's something we need to talk, get you pre-qualified and get you talking to Rob about looking at that property, sooner than later. And these all go to help you do that. So.
Right. Now, you know what? You mentioned pre-qualified. Of course, we always suggest to all of our clients to get pre-qualified for a mortgage before they even start shopping, so that they know just how much they can be able to afford to move forward with getting pre-approved for a mortgage. Now, are there any changes with respect to these 30-year amortization options to make it a little bit more challenging to get pre-qualified, or it's the same qualification terms and conditions apply?
Same terms as we had before. I mean, there's still the mortgage stress test that we need to qualify you on, but that's all based off of your interest rate. Now, the benefit with the 30-year amortization is your payment drops, because we've got 5 years extra to pay for a mortgage, so your payment comes down, which then qualifies you for a higher mortgage. So there's not really any deterrence. It's more of it helps get qualified for a higher amount.
So, and I know nobody has a crystal ball, but there was some talk about getting rid of this mortgage stress test. I know that's not happened yet. Can you just maybe review for some of our first-time home buyer audience, what is it? What do you mean when you say mortgage stress test?
So the first part, so I'll explain what it is, and then they did take some of the stress test away. So let me explain that after.
So they lowered the amount of stress.
Well, yeah. So what the stress test is the Bank of Canada, it came out when rates were really low. And they knew that rates weren't sustainable in the long term. So because of the banking system wanting to be safe, they did not want to be qualifying individuals at a 1.5% or a 2% mortgage, because that's not normal. That's not historically accurate. So what happens if you get qualified at 2% and then the renewals come out 5 years later and the rates are higher? Can you now still afford to stay in that home? They don't want people to qualify for something and then turn in keys or not being able to live every day because of their obligations of a mortgage now that they didn't know what the rate was going to be 5 years from then. Right. So the Bank of Canada came out with a stress test. So we have to qualify every new buyer at the rate that they're getting plus 2%.
Plus 2%.
That's not what you pay, but that's what the bank has to qualify you at. Or the Bank of Canada rate, which is 5.25%. Right now, your rate is 4.5%. We need to qualify you at 6.5%. Okay, so that's kind of how the stress test works, just to ensure that in the future, if rates go up, you're still able to qualify. You're still able to make those payments. Okay. What the Bank of Canada just did here also, just lately, was they removed the stress test if you already have a mortgage and you're renewing. So if we're looking to move you to a new lender, we can now qualify you on your contract rate, on the actual rate of interest that you pay. Because they did that because of competition. So it wasn't fair. You've already done the stress test once when you bought the place. So they didn't feel that it was prudent to have to redo the stress test on a renewal because your existing lender isn't going to be stress testing you. You just renew. But what they were worried about is on competition wise, your lender doesn't have to give you the best rate now because they know you have to qualify to leave.
Right.
Okay. So what they've done is they've just based it off of the actual interest rate that you pay. If you qualify at that rate, then you can move to a new lender. Okay?
For renewals only.
For renewals only. But purchases are all still at the contract plus 2.
Good point. You know what? I don't think a lot of people realize that change happened. I remember that was earlier this year, if I remember.
Yeah, a little earlier this year. They've opened it up. What the new one that just changed late here in December was they've opened that up to uninsured mortgages as well. So any mortgage now can be qualified on a renewal based on the contract rate.
Perfect. Well, good to know. Well, thank you very much for that. I know. I personally always like to keep myself up to speed on all these changes, and there are a lot of them. So we've discussed the amortization being extended to 30 years. We've discussed the down payment requirements being down between 5% for the first 500,000 plus 10% for the remainder, all the way up to 1.5 million now. We've discussed the stress test. Now, you know what? There's something else exciting that I know is coming, but we don't know 100% all the details. And we discussed this off air here a little bit ago, and early 2025, there's something coming in about the secondary suites. What's that all about?
Right. So January 15th, there's actually one program that's starting January 15th, and that's the refinancing an insured mortgage up to 90% of the value to a maximum of $2 million. Okay. So that's what's coming out. We don't know all the information yet because of the fact that it's not out yet. So the lenders haven't come up with all of the nuances to the program. But what the government has said is that they want to allow refinancing to 90%. They only ever let us do it to 80% before, and it wasn't insured. So the banks charged a higher interest rate for refinancing because they didn't have mortgage insurance anymore.
Right.
So now they're allowing us to refinance to 90% of the value of the home, up to 2 million. So not the 1.5 that we just talked about. They're actually allowing that to go up to 2 million.
Nice.
But you have to use the proceeds for a secondary suite. So it's not to pay out your credit card, and consolidate debt, right? Or make other investments. It's got to be used for the secondary suite. That's what we don't understand yet if your home's already worth 2 million, then yes, you can take it up to 90%. That won't be a problem. If it's only worth 1.5 right now, but once the work's all done with putting in your garage suite, or the
basement,
carriage home, or whatever we want to call it right now, right?
Yeah, or even developing your basement into a suite.
And now we go up to, now your house is now worth $2 million. Does that, the bank's not going to give you that money yet because the work hasn't been done, right? Same thing with, I'm worried about, I don't know what's going to happen with even the 90% program. If they give that money to you to do the work, how are they going to prove that the work's been done? So I'm not sure how the banks are going to work that out yet. So once that comes out, we'll do an updated video for you to let you know exact parameters on what belongs there, right?
Exactly. So stay tuned, everybody. We'll be updating you once we have some concrete details on that. So good to know about that. Now you know what? There was something else. There was improvements or something where you can improve a home, right? What's that all about?
So there's purchase plus improvement. But let me get back before I get there. There's another program that's also coming out in early 2025 that the government's announced here at the last economic update. Same for secondary suites. So that's why I want to stay with that right now. It's a program through the government that's a 15-year term at a 2% interest rate, up to $80,000. So they're saying you can use both programs. So you could do the $80,000 secondary suite program at a 15-year amortization with 2% fee or 2% rate, and also do the insured refinance up to 90%.
Wow.
So I'm not, but like I said, we don't know a lot of information on that yet, but it does sound very promising for any type of investor, existing homeowner, that because everybody that you see,
Win-win.
yeah, like a lot of people you see, I'm sure, are asking for that basement access and all of that type of stuff. Well, now you can rip out the wall and put a basement access in with those types of funds available.
Absolutely. And you know what? Win-win, big time. I know the government wants to incentivize a higher density with some of this, the larger cities that we have, instead of sprawling out towards just kind of redevelop what we have. And this is a great idea. But we also are seeing here in the greater Edmonton area, and this is not just in Edmonton, but all the communities around Edmonton, that home builders are already building homes with a separate entrance into the basement. They're not developing the basement, but there's separate entrances to the basement. There's also provisions for additional plumbing drains for a kitchenette or kitchen down in the basement, so that's already all set up for you. Now, once you take possession, next thing you know, you can take advantage of these two programs. That's a huge win for a lot of buyers that are looking to, supplement their income with some of these basement suites. And maybe they even have extended family, but they want to have that extended family to have their own private space.
Yeah.
This is a win-win, big time.
No, it'll be great there. And getting back into that redevelopment part of stuff you were talking about, that's really where that Purchase Plus Improvement program would come in. So what the Purchase Plus Improvement program allows you to do is, say you find that home that's perfect location, love the floor plan, love the size of the home, but it's dated. Whether it's a kitchen, whether it's bathrooms, fixtures need upgrading, whether it's painting, older furnace, hot water tank, those types of things. Even the roof at that point, right? I mean, everything else is great, but it needs a new roof. And where am I going to come up with $15,000 or $20,000 to do these renovations? So as long as you can get the quotes up front, which is the big part of the program, because we need to send that in along with the purchase contract. And that's where Rob can really help you with getting the proper professionals in to get those quotes right away.
Yeah, we have a list of preferred partners, you bet.
Right. So we would, at that point, send that in. But you still have to pay for it up front, because the banks always want to make sure that you do the work that you say you're going to do. So they'll never give you the money up front until the work's done. So as long as you can put it on the credit card, or, I'm sure Rob's got some preferred partners as well on some contractors that would help you with, whether it's a 50% down payment and then the rest later on. There's always negotiations involved, but you pay for it up front. Once the work's done, the bank releases the funds to you after the inspections are done. And then you've got your beautiful home that you may have passed over on, but shouldn't have, because the jewel was there. It was just,
that's right.
You need a little bit extra that you can put your stamp on it, and you can put it into the mortgage. So you're not paying all of it on a credit line or a credit card at 20% interest. We can put it with your mortgage over 25 years. That $30,000 upgrade is adding $100 and some a month to your mortgage, but that place is now perfect for you. Right.
You know what? That's a good point, Andre. And I find that's a huge setback for a lot of buyers that are, looking, and maybe they found something that's, we looked at a home, maybe it's backing onto a park, or it's close to the school, or the location is great, the floor plan's great, but it's dated, or maybe the basement's not developed and they need that extra space. And so now, knowing that this program is available, or is going to be available, that's fantastic. This program, if I remember correctly, has always been available for a few years now, right?
That one's been around for a long time. It doesn't get utilized as much as you'd think.
Is there a maximum amount?
So yeah, there is. So you can 10% of the purchase price, or 40,000, whatever's lower. So I mean, if you're buying but most of the lenders now will go up to 40. I have one lender that will go up to 100, and they'll do draws. So if you're looking at a very massive renovation, they will look at them. But remember, and that's the deal. And what I like about them is that most people can't afford $100,000 to do it and then get paid out. They'll actually allow draws. So you can do it. You can do a $30,000 do the draw on it, get the money back out, finish the next phase, get the money out, and then
Oh,
finish the
wow.
last phase.
That is excellent. I actually did not know that myself. So thank you very
Yeah,
much for
no,
enlightening me, Andre, and the viewers. I'm sure everybody's excited to hear that. That's a huge amount. Just imagine $100,000 here. It can go a long ways. You
yeah.
could build a garage. You could do a basement suite. You could upgrade your kitchen, bathrooms, all the light fixtures, all the flooring. Like there's a lot you can do with 100 grand.
You can really update that house,
Yeah, no kidding.
right?
That's great to know. And you can do draws, so that's fantastic. Very, very exciting.
Yeah.
Looking forward to introducing that program to some of my clients upcoming here in the 2025. Um, so without further ado, is there anything else you can think of other than, of course, the elephant in the room, the interest rates? I mean, interest rates have been going up like crazy since COVID, and then now we're looking at several interest rate drops this year. What are your thoughts on what's been happening? What are your thoughts on what the experts are saying is projected for the 2025 and onwards? Well, everybody's kind of wanting to know what's going to happen with the interest rates.
Yeah, if we had that crystal ball, right? Right, Rob?
Right.
So what the
I have
economists,
you. That's
yeah,
you're the
exactly,
crystal ball.
exactly. What most of the economists are getting at, and we just had our DLC economist come out to Edmonton here about 3 weeks ago now. So we had a good conversation with her, and most of the economists are anticipating a drop of prime rate probably by about another 3/4 of a point. So if they do that, that should bring the variable rates in that 3.75% range, okay, which is getting to be pre-COVID levels on the difference between the fixed rates and the variable rates. So historically, fixed rates are 0.75% higher than the variable. Right now, variable's higher. So they're getting that back in line. That's what the Bank of Canada does, because the Bank of Canada sets the prime rate, which the banks then use for their variable rate funding. Fixed rate mortgages are set on the bond market. So the bond traders already know what the Bank of Canada is going to do, because the Bank of Canada has told them what's coming up. So they've already priced in these reductions to prime. So the fixed rates, I don't think, are going to change much. I think we're fairly steady around this 4.5% range that we are right now. Over the next 5 years, the economists figure that is going to be similar to where we're going to be at. Now, there'll be maybe a 0.2, 0.3% drop increase here and there, but I don't think we're getting to the 2% anymore. Right? That was a
Right,
COVID anomalies there. I don't think we're going to be at the 7s either. Right? I mean, that's it. I don't see that. So, I mean, historically, anytime you could get under 6 was a great rate, right? I mean, if you look at the historical numbers, now we're under 5, which is a little bit more normal. Not for
but sustainable.
sustainable,
You know, this
right.
is something where the buyers that are sitting on the fence that are considering, should I buy now because, oh man, maybe the interest rates are going to drop another 1 or 2%. That's just not in the cards, is
Well,
it?
no, and remember, you're only renting money for 5 years. So
Right.
if you're going to pass off a decision to buy because of the interest rate, if you look at how much, if at a 1% house increase a year, when you're talking about a $500,000 home that's increasing at 5 to 10% or 2% a year at 10 grand, the 1% interest that you paid on your mortgage doesn't equate to what you're getting in the value of the home. So
I am so glad you mentioned that, because a lot of buyers that are sitting on the fence are thinking just that. They're thinking, oh, well, I just want to wait till the interest rate drops even more. But what they don't realize, this year, for example, in the greater Edmonton area, a single family detached home has gone up by, get this, 17%. Just in 2024, okay? Last year was just under that, so we're talking just under 15%. And so if you wait another 6 months to a year thinking that you're gonna save on the interest rate, you're not gonna save anything, because the home prices are still projected to go up quite a significant amount again in 2025, 2026. We are still by far the most affordable large city in Canada. We are there's a huge difference just between us in the Edmonton area versus Calgary, close to $250,000 difference,
Yeah.
where we traditionally, just like the interest rates are traditionally kind of hovering around that 4.5%, the traditional kind of balance between Edmonton and Calgary is the difference is usually around $100,000 difference. So we still have $150,000 projected growth in the prices, in the average home price here in the greater Edmonton area. So don't wait for the interest rates to go down.
Opportunities there. Rates are great. 30-year amortizations now. Like, it's a gret time. It's exciting. Like, and that's the outlook for 2025 is we are very excited. I mean, the run up to that spring market this year is twofold. So one, it's going to be busy. Rates are going to be dropping, so you're going to have a lot more in the media. Which, what does that do? That brings out competition. What does competition do? Increases pricing. So the longer you're waiting into the spring market, even though the rates are going down a bit that we just talked about, those house prices are going to be coming up because there's less houses on the market than there are buyers for them. So
for sure,
you want to get out earlier than later, especially what's coming up in the next few years. I think it's a great time to really take advantage of that early spring market and start looking at December, January, February, March before the weather gets nice.
That's right. That's right. A lot of people are of that opinion, is that, oh, the best time to buy or sell is in the spring. But honestly, that's the best time to be in the middle of all that traffic, meaning that there's a ton of competition, both from the buy side and the sell side. So if you're thinking about selling, don't wait till the prices go up, because guess what? You are also going to be faced with your little local market where a whole bunch of your neighbors are also going to be selling or waiting to sell their spring, because everybody knows that your house is going to look nicer when the snow is all gone. But the buyers are going to be out there waiting for all those other homes to go up. So what are you doing? You're basically waiting for competition to happen. As a seller, you should be putting your home on the market as soon as possible so that you can actually take advantage of this very low inventory levels we have right now. This is traditionally the lowest inventory I have seen in decades.
Well, and it's not that you're putting your house on now and not getting anything out of it, because you're also upgrading, getting into a different property before that market goes up too. So
that's right.
You're actually
win-win.
You got a win-win, because your property is a little bit lower value at that point. If you're upgrading, you're gonna that 15% on 500 is different than 15% on 300.
That's right.
It's a win-win for everybody.
So you know what? With that being said, that's a great way to end off our video here on a positive note. Lots of positive changes. We're gonna have all of the notes from the video here for you in the comments below. Speaking of comments, if you guys have any comments whatsoever, please let us know. If you have any questions, we'll get back to read all of our comments here. Andre is going to prepare some additional information, so we'll put into that video. So if you guys have any questions whatsoever, feel free to reach out to either one of us. The contact information will be below for you. And looking forward to next year to an update here in early January. In the meantime, Merry Christmas and Happy New Year to you and your family, Andre. And
thanks,
looking forward to 2025.
Me too. It'll be great.
Perfect.